Shares of Zoom are lower in the pre-market. They jumped in the extended session yesterday after the company beat first quarter top and bottom line estimates, but the shares later gave back some of those gains. Investors may not have been completely impressed by the amount that the company raised its full-year profit and revenue outlooks by, given the beat for the most recent quarter. Stock right now down by about 2%. Joining us right now, first on CNBC, is Zoom CFO Kelly Steckelberg. And Kelly, welcome. Had strong numbers, but I guess this is maybe a situation where people are always asking, what have you done for me lately?
Thank you. Good morning. We're very pleased with our Q1 results. As you just mentioned, we beat on both the top line and the bottom line, and we raised our full FY24 outlook for both our revenue as well as our profit targets. And this was largely due to very strong performance in the online segment of our business. That business, we've been very focused on getting it stabilized, and that occurred earlier than we expected. We were also very pleased with the performance of Zoom Phone, which is our cloud PBX solution, which we announced is now 10% of our revenue. And we're just very pleased with the outlook, and we're going to continue to execute through the rest of the year.
What is the situation just in terms of controlling your margins? I know you had announced some layoffs earlier in the year. How is that playing off and playing out? What do you see right now just overall in terms of whether or not you think additional cuts need to come?
So we announced that we had achieved our long-term target of our gross margin of over 80% in Q1. We did indicate that we're going to continue to make some investments in AI throughout the year, but still guided to 79.5%. And then from an operating margin perspective, as you indicated, we made some very difficult decisions earlier this year to reduce, but we're very pleased. We overachieved our operating margins. We came in at 38%. And we are continuing to invest in areas that we see we can drive growth. This includes both investment in our R&D teams as well as our sales and marketing teams, focusing on expanding our Zoom Contact Center team, as well as, of course, continuing to invest in the topic of AI that everyone's talking about. We see that is really important to the future of the company. And we made some collaboration investments this last quarter with both OpenAI as well as Anthropic. We also announced an acquisition of Workvivo. We're thrilled to have them join our team. So we feel great about where we're situated for the future, and we'll continue to contribute strong margins for the rest of the year.
What are you seeing in enterprise, Kelly? Specifically for enterprise, average revenue per user was down 2% sequentially after 4 straight quarters of quarter-on-quarter growth. Some analysts are saying they will see the forecast that this will continue in the current quarter and going forward. What are you seeing right now?
Yeah, we had not only a reduction, but also a reorganization in our sales team in Q1. And understandably, that caused some distraction. But we are now really focused, as I just mentioned, on continuing to invest in this area. And we continue to see strength in Zoom Phone, in Zoom Contact Center. We are thrilled that in March, we launched the beta features of Zoom IQ, which leverages generative AI now to support our customers in their productivity around things like meeting summary, chat, and email compose. And these are all the products that are going to drive the future growth in our enterprise segment.
You're not seeing any of the enterprise users migrate to the new version of Teams that incorporates AI already?
We saw very strong performance in Q1 in our renewal segment. So we have a seasonal trend that Q1 is our largest renewals quarter. And even though some of our customers have been impacted through their own reductions, we were able to work with them. And even if they wanted to reduce their seat count, to potentially repurpose that spend towards areas that we can help them save, like Zoom Phone and Zoom Contact Center. And we are thrilled with the position that we have in terms of AI. Again, Zoom IQ is going to be a smart companion that everybody will have to help make them more productive. And we have that AI already built into our DNA. We've been using it for things like virtual backgrounds that you can see me using here today. And that's been part of our DNA from the very beginning. So we're really excited about the future of continuing to apply AI to our entire product suite.
Kelly, we had an interesting conversation with Strauss Zelnick yesterday from Take-Two Interactive. Just this idea of AI. Is it going to make companies more efficient? Is it going to make it cheaper and easier to do these things? Or is it just going to increase the expectations, the product at the end of the day? He thinks that this is just a situation where all this technology in the past has always just been used to make the product better. It's not going to get cheaper. It's not going to improve margins, but it will make the product better. What do you think?
I think it's going to absolutely make the product better. We're really focused on how do we make all of our customers more productive. And if you think about, you can spend less time on tasks like meeting summaries and more time with your team, that makes us all better. And that improves human connection. And that's really what we're focused on. I think in the near term, what you're going to see is significant investments across all companies as we're all looking to leverage. Our approach is take a federated approach to AI. So you're going to benefit from the learnings from our language models, as well as some of these key collaborations that we put in place. And then, of course, our customers' models as well. And in the future, I think we're going to see a very different time where we don't have to spend time on doing things like meeting agendas, but again, connecting with our teams in much more meaningful ways.